AMC stock is about to go crazy. Yes, this comes down to the executive order. It comes down to a lot of what we are going to discuss here in this video. But before we get into any of that, and I'm not even going to go over what we're going to talk about here in this video. This is a video you want to watch in its entirety into the end. I will give you guys the scope of what I expect to happen over the next couple of days, heading into the executive order, how I am trading AMC, and why I am so convinced that right now we could possibly see a major rally in AMC stock. It's not the beautiful trend line that we're looking at for the day. This beautiful rally, you couldn't ask for anything more picture perfect than this, but it goes a lot deeper than that. So let's get straight into it. You guys know the spiel. Hit the like button, subscribe to the channel, all of that good stuff. We will be live in between 10 and 11 p.m. Eastern Standard Time tonight. Come join us. If you guys want access to all of my trades, link down below in the pinned comment. But let's not waste too much time with that. I first want to start with the two bombshells that came out from the Fed today, because I think they are very telling, and I think it's going to overall add to a lot of bullish sentiment in the markets. But this one specifically stood out to me more than not. It says, the minutes cautioned about, quote, the trading and risk management practices of some key participants in commodity markets that were not fully visible to regulatory authorities. Okay, a little bit weird. But then look at this. The next line, risk management issues, quote, could give rise to significant liquidity demands for large banks, broker-dealers, and their clients. I think this is very telling in and of itself. Basically saying, hey, there's a lot that we don't know that is going on in equity markets, probably hinting at a lot of the derivative exposures or potentially hinting towards hedge funds blowing up. There is some reason that this is in the FOMC minutes report when it has not been at times in the past. And I think it's not necessarily pointing directly towards meme stocks, AMC, GameStop, things like that, but I think it is at the same time. I think the Fed is trying to acknowledge that there is a certain degree of risk that is hidden in risk management strategies, right? They literally say risk management issues. So I think that is very, very telling. But here is the real bullish quote that has the markets going up substantially after the minutes report came out. It says, still, officials remain committed to raising rates and reducing the balance sheet. The minutes stated that doing so would leave the Fed well positioned later this year to reevaluate the effect policy was having on inflation. This is essentially saying, hey guys, we're going to raise rates super aggressive at the next couple of meetings, and then we're pretty much going to stop raising rates that aggressive, or we're going to stop raising rates completely, because I think the Fed is starting to realize that at this point they have to get rates up, because when we do go into another deep recession, they need to be able to stimulate the economy by cutting rates. It's textbook finance Fed 101, whatever you want to call it. They raise rates when the economy is good so they can cut rates when the economy is bad. Well, in this case, they're raising rates when the economy is already going in the toilets, which they should have been raising rates a long time ago. They fully understand that part. But at the same time, they realize that, hey, we're going into a recession because, most importantly, food and energy costs. They can do whatever they want to try to get domestic inflation down, which the core CPI reading has went down the last 3 months in a row. So it's obviously working domestically, but the things that are really affecting the economy by and large, the largest dollar amounts, is food and energy, things people can just not run away from. If there's inflation, for an example, in restaurants or in services, right? If AMC raises their ticket prices, you know, the Fed can do what they want to cool that down, but people in the grand scope of things can just not go to theaters, not go to restaurants, and not go to a skate park or a water park, right? They can choose not to do those things, and that also helps to keep prices tame. Well, nobody can get around not buying gas or not buying food. So that's really what is going on here under the surface. But bottom line, these two quotes are very, very telling. The one about risk management, that's very important. Obviously goes without saying. Hopefully I don't have to elaborate on that too much, but they basically gave us a time frame to look forward to the rates not going up anymore. Basically an end to raising rates this aggressively. So that is very bullish, and that is definitely causing the markets to have a bit of a bullish reaction. You're seeing a little bit of a sell-off right now into the last couple of minutes of trading. We have about 20 minutes of trading left here in the day. AMC stock not even being affected by that, just looking absolutely beautiful. Now let's get into this whole situation about the executive order and all of that, why I think AMC stock is about to go crazy, and how I am really trading this. So what is happening today essentially is GameStop. There's not any real news, but if you do look at Ortex and you pull up GameStop, the cost to borrow rates went up a lot today. And if you've watched this channel for a while, you know why this is. You know the significance of this and why the cost to borrow rates are going up. Right? Cost to borrow max on GameStop is now 328.35%. And I want to elaborate on this a little bit more in the next video we are going to make today. Why, specifically, what the cost to borrow numbers could give us as far as hints to where the stock could go. I think it's pretty obvious, but if you guys don't know, stay tuned for that one. But it's making the stock go up about 27% today. And I really don't think it's shorts covering. I think it's a lot of people that have sold out of GameStop, sold out of AMC, that are buying back into the stock. But most importantly, I think it does come down to the executive order. And we tend to see these rallies leading up to the executive order. Now, if you guys are unaware, the executive order went into effect back in January, right? We peaked out the day the executive order actually went away, and they retracted the executive order for about 3 months. So we peaked out the day the executive order actually went away again. And the executive order, if you're unaware, by now hopefully you are. If you are not, make sure to subscribe to the channel so you will be aware of these important things in the future. But essentially what that order is it says that hedge funds can no longer use Chinese securities as collateral. So when that goes into effect, it is a big deal. It's a very big deal. It was in January and in June, and it is really the underlying cause, I believe, of the last two MOAS-like events with AMC as well as GameStop. And essentially, the day that executive order goes away is the day you see the tops in January and in June. June 2nd was the top, and that was when the executive order actually went away. The executive order was actually implemented on May 27th for AMC stock. And you guys can see the significance of May 27th. You did see a 35.5% positive day. Executive order was taken away, or hedge funds could use Chinese securities as collateral again starting on June 3rd, and the stock went down 18%, and it was pretty much downhill from there. We were range bound for a while, but eventually we did fall. So really from May 27th, the stock went from a low of $18 up to $72 during the time this executive order was actually implemented. Now this executive order goes back into effect on June 2nd, June 3rd. Call it June 3rd because that's the day it actually got retracted last time around. So what you've seen heading up until the executive order actually went into effect on May 27th was really 1, 2, 3 big green days where you went up 13.25% back here May 24th. May 25th, you went up almost 20%. May 26th, you went up about 20%. And then, like I said, the day the executive order got implemented, you went up about 35.5%. So you do see a couple days at least of a rally before the executive order actually does go into effect. If you want to get more nuance with it, you did see a rally from $8.31 per share up to May 24th. You did go to about $10.40 per share at the low of that day. So you've seen a small rally weeks and weeks before the executive order went into effect, but the days up until is when the stock really started to make big moves. And it's no surprise, to me at least, that we are seeing the stock making big moves today, up almost 13% at the time of recording this video, with only a couple trading days left until the executive order actually does go into effect. So let's count how many trading days we have left until this executive order does get implemented. Again, you have 1, 2, 3, 4, 5, 6. 6 more trading days left until the executive order does go into effect on June 3rd. So I'm not going to be surprised here if you continue to see bigger green days than not, and then we start to see really big green days, because in the grand scope of things, you see these 20-30% positive days, and then you ultimately see a 100% day or a 300% day like we seen in January, and that's what I expect. So the higher we get heading into the implementation of the executive order, I would expect to see one or possibly two very big days, say a 100% day, and then maybe a 300% day or a 200% day. And that might be it of this leg of the MOAS. Now, I will say, liquidity conditions are much different now than they were in January and in June. In January and in June, the stock market was hitting all-time highs. Money was cheap. Interest rates were low. There was just money everywhere. You could essentially, as a hedge fund, go out to a bank, go out to another hedge fund and borrow money so cheap it made sense not to cover on your short positions. That's why a lot of shorts did not cover on their short positions in January and in June. Well, the situation is a lot different now. Interest rates are a lot higher. It's not as accessible to get access to billions of dollars of capital in this kind of market environment. I don't know of any hedge fund right now that is just openly willing throwing money at other hedge funds for any reason, right? They're not going to do that. So the odds of shorts actually being able to stay in their short positions this time around, I think, is a lot lower. And I think the attention factor of AMC and GameStop is obviously still very relevant. You know, people have not forgot about AMC and GameStop, even if maybe you guys or other people were in these stocks at one point, sold out, whatever, made money. You're probably buying back into them, right? If it's not you guys, I know other people are, right, that have sold out. They're getting back into it. If they're not right now, then they will be over the next coming days, especially as this talk of the executive order and potentially how big of a deal that is actually does start to circulate a lot more. You're going to see a lot more people flooding into these AMC and GameStop positions. Now, on top of that, you do have a lot of activity. The option activity for the day is actually absolutely going just crazy for GME and AMC with very high positive order values. For some reason, it says a 33% positive order value for GameStop, but about $96.79 million worth of options heading out to the option chain for the day. But dude, look at this option activity. It's insane. It's pretty much all calls that has really came in the last couple of hours or so. Look at the strikes though. $300 strike for June 17th. June 17th, $300 strike. May 27th, $105 strike. May 27th, $100 strike. June 17th, $110 call. 102 call for May, some puts that are coming through, and that was really yesterday's option activity. So you guys can see, it looks like a lot of hedge funds are really looking at the $300 strike for June 17th for GameStop at least. Now let's pull up AMC, because I know a lot of people are more so in AMC, and I think they're both just great squeeze candidates either way. A little bit different. I think AMC can offer a lot more potential risk to reward, but nonetheless, a lot of very bullish option activity as well. A trade for about $604,000 for June 17th, $20 calls. Look at this trade though, just insane. A $20 put, and they bought that for in order for $12 million. So I think with a little bit less of these large bearish option activities, positions, the stock would probably be up a lot more today. Now, when you factor in the market makers have to go out and short a lot of stock for a $12 million single put position. You know, they have to go out and short a lot of stock to be able to oblige for those put options if they need to, right? So it caused a lot of artificial shorting activity, but if the stock continues to go against them, aka the stock continues to rally, that's going to be a lot of unwinding of short positions market makers will have to do at the same time. So there's definitely multiple ways to look at that, but overall, I do think it could be a bullish thing if the stock does continue to go up over the next coming days and definitely over the next trading week or so. Now, overall today, 13 orders totaling $17.45 million, positive order value of 46%. So looking good. Short interest at a record high at 22.24%. Just insane, right? Current shares that are sold short of 114.64 million. Cost bar max at about 8%. Cost bar average at about 4.29%. Utilization of 100% and days to cover sitting at about 3.38. Free flow out on loan substantially higher than the shares that are sold short, sitting at about 32.38%. So a lot of shares that are out on loan that potentially could be used against us. Just keep that in mind. But I don't think it makes a lot of sense to short the stock, especially heading into this executive order. I think a lot of these shares out on loan are really waiting to get let out into the markets once we do see the big rally. It makes a lot more sense to short a stock when it goes up to say $100, $200, $300 rather than shorting the stock at 11, right? You open yourself up to a lot of risk. So that is that. It looks like the stock is popping actually into the close of the day today, which that is a very good sign as well. To see a strong close is exactly what you want to see. And look, even the markets are dropping right now. The 10-minute rig came out and the markets dropped. AMC stock doing the exact opposite, ripping to the sky. So I do think we are in for a very explosive next couple of days, next trading week. It's going to be very good. Now, specifically how I am actually trading AMC right now, I really do like the June 10th and June 17th options, targeting really $20 to $30 strikes. I think that's the sweet spot where the stock could go much higher than that, but that's where you get the most bang for your buck as far as premium, right? A lot of market makers, they don't expect a stock to go back to $20 or $30 within the next 2 or 3 trading weeks. So they're pricing these premiums very, very cheap. Actually, you can get, like I have right now, which is not a recommendation, I have a June 10th $20 call on AMC for $35. I think the odds of AMC going up substantially above $20 per share over the next, let's call it a week, are very, very high. I really don't expect anything less, especially what is happening with GameStop. It's very encouraging. We've known about this rally. We've talked about this rally for a long time, but now you're actually seeing it coming into effect. Literally the way that we have portrayed it here on this channel, coming days up until the executive order, stock's going to rally, and then you're going to see 1 or 2 very big days, 100% days, if not multi 100% days, once the executive order actually does go into effect. Ultimately, it probably will be retracted back, and they'll probably not keep the executive order implemented for a very long time, but it's going to be enough to give us a very substantial rally, and hopefully you guys make some money out of this video. Nonetheless, I think it's very, very exciting. So that is going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Hopefully you guys learned something. If you did not, leave your comments down below, what you are confused about, so on and so forth. I will do my best to answer them. If I do not have a chance to answer them, then come join us on the live stream in between 10 and 11 p.m. Eastern Standard Time. We will be live to answer all of your questions, talk about everything that was said here in this video, and much more. So come join us. Get your free stocks with Webull, Moomoo, and Public down below in the description of this video. That is single-handedly the best thing you guys can do for your financial futures right now. And let me get you guys in on a little secret here. If you go ahead and get your free stocks now, you can actually make some free trades on AMC stock for the next week just off of free money you get from those free shares. So obviously not a recommendation, but a little fun thought out there. So that is going to be all. You guys enjoy the rest of your day, and I'll see you in the next one.